Welcome back to our channel. Today, we're diving into the fascinating world of Bitcoin and examining its current market behavior, which has left many investors scratching their heads. Bitcoin, the leading cryptocurrency, has been trading within a tight range of $60,000 to $70,000 for the past 8 months. This unusual sideways movement is not typical of a bull market, especially considering Bitcoin's history of significant price increases during previous bull cycles. We'll explore expert insights from renowned analysts like PlanB, James Lavish, and Lawrence Lepard, who offer their perspectives on this market stagnation and its implications for the future of Bitcoin and the broader economy. So let's get started. To understand Bitcoin's current position, we need to recognize that this is the 8th consecutive month it has been stuck in the $60,000 to $70,000 trading range. Historically, Bitcoin tends to experience upward momentum during bull markets, with significant price increases observed in previous cycles, most notably in 2011, 2013, 2017, and 2020. In each of these years, Bitcoin's price surged dramatically, providing incredible returns for investors. However, we find ourselves in a perplexing situation today, as the market appears to be flat, leading many traders and investors to question what is happening. PlanB, a popular anonymous Bitcoin analyst, has characterized this unusual behavior by stating, "Bitcoin is acting like a stablecoin." This assertion highlights the disconnect between Bitcoin's historical performance during bull markets and its current stagnation. The idea of Bitcoin being stable, while it has previously been viewed as a highly volatile asset, signals a significant shift in market dynamics. Investors are left wondering, why is Bitcoin stuck in this range, and what does it mean for the future? This leads us to examine the various factors contributing to this sideways movement, including broader economic conditions, investor sentiment, and market manipulation theories. In recent weeks, the cryptocurrency market experienced a surge following the US Federal Reserve's announcement of its first rate cut since March 2020. Many analysts believed this announcement would trigger a much-anticipated pump in Bitcoin and other cryptocurrencies. Initially, we saw a positive response, with prices rising, but this pump was short-lived. The excitement surrounding Bitcoin earlier in the year was significantly driven by news regarding ETF approvals. The anticipation of these approvals generated a substantial amount of market excitement, leading to a sharp increase in Bitcoin's price. However, this enthusiasm created a disruption in the typical bull market cycle. For the first time in 4 halving cycles, Bitcoin reached an all-time high before the halving event, which traditionally acts as a catalyst for price increases. This early surge, followed by a prolonged period of stagnation, has left many investors feeling confused and uncertain about the market's future. PlanB explains that this weirdness in market dynamics won't last forever. He argues that several tailwinds, such as the upcoming US election, more rate cuts, and easing from central banks, will ultimately prove to be bullish for Bitcoin in the weeks and months to come. To put the current flat market into perspective, we can look back at Bitcoin's history during previous bear and bull market cycles. One notable comparison is the period from 2019 to 2020, when Bitcoin hovered around the $10,000 mark for several months. During that time, many investors expressed skepticism, wondering if Bitcoin would ever rise again, much like the concerns we hear today. The uncertainty surrounding Bitcoin in 2019 was exacerbated by the global pandemic, which disrupted traditional markets and led to widespread economic instability. Yet, after the dust settled, a significant shift occurred when central banks around the world implemented quantitative easing measures. This flood of liquidity into the market served as a catalyst for Bitcoin's price, leading to an explosive rally. PlanB draws parallels between that period and the current market dynamics. He suggests that we may be on the verge of a similar breakout, especially with the US elections approaching and expectations of more central bank easing on the horizon. Just as Bitcoin took off after the previous market disruptions, it is likely to experience another surge when institutional investors, or whales, return to the market. As we analyze the current landscape, we can turn to insights from prominent analysts like James Lavish and Lawrence Lepard. Both of these advocates for sound money have expressed concerns about the global economy, particularly regarding the rapidly growing debt spiral. They argue that this situation is about to worsen, prompting central banks to unleash more monetary stimulus in their respective economies. Lavish highlights that uncertainty is not conducive to market stability. He points out that markets hate uncertainty, and the current economic climate has created a sense of apprehension among investors. For instance, the recent drop in the Nikkei index by nearly 5% raised questions about potential liquidity issues and whether we are heading into a recession. Despite the turmoil, Lavish remains optimistic about Bitcoin's long-term prospects. He states that Bitcoin is a relatively small asset, valued at less than $1 trillion compared to the $900 trillion in investable assets worldwide. This disparity means that Bitcoin is prone to volatility, as large amounts of trading capital can move the market dramatically. However, he emphasizes that Bitcoin is fundamentally tied to long-term growth and liquidity. As central banks expand their money supply, Bitcoin is likely to follow suit over time. Similarly, Lawrence Lepard adds to this sentiment by recalling the historical context of Bitcoin's price movements. He notes that we are in a comparable situation to 2019 and 2020, when Bitcoin fluctuated in the $5,000 to $10,000 range, while gold remained stagnant at around $1,365. Gold broke out first before Bitcoin experienced its substantial rise, and Lepard believes a similar scenario could play out again. Now, let's delve into some technical analysis of Bitcoin's price action. Analysts have noted the formation of a bull flag, a pattern that often indicates a continuation of an upward trend. PlanB's analysis reveals that this flag has been forming for several months, signaling that Bitcoin may be gearing up for a significant breakout. Currently, Bitcoin has been consolidating, creating lower highs and lower lows. This consolidation can be seen in both daily and weekly charts, where price movements reflect the ongoing battle between buyers and sellers. The critical point to watch is the $66,000 level. If Bitcoin can break through this resistance, it could quickly move towards the all-time high of approximately $72,000. Traders and investors alike are paying close attention to these levels, as the breakout could signal the start of a new bullish phase for Bitcoin. Once Bitcoin breaches the $72,000 mark, it enters what traders call price discovery, where prices can surge rapidly without established resistance levels. This scenario could set the stage for Bitcoin to reach six figures, especially as institutional interest continues to grow. While analyzing Bitcoin's potential, it's essential to consider the broader macroeconomic environment. Recently, the US national debt has reached staggering levels, with new data indicating a rise from $35.46 trillion to $35.7 trillion in just one day. This rapid increase in national debt has raised alarm bells among economists and analysts alike, as the US budget deficit has ballooned to an astonishing $11.89 trillion, a 24% increase compared to the same period in 2023. The implications of this growing debt cannot be overstated. Experts warn that if urgent and necessary steps are not taken, we may soon see discussions of trillions added to the national debt in just 24 hours, rather than hundreds of billions. This trajectory poses significant risks to the global economy, but it also creates opportunities for assets like Bitcoin. Lavish points out that increased money printing often leads to higher asset prices. As central banks resort to more easing measures to address mounting debt and economic challenges, Bitcoin stands to benefit more than other traditional assets, such as gold. With the potential for further central bank interventions, Bitcoin could rise faster and higher than any other asset class, reinforcing its position as a hedge against inflation and economic instability. In conclusion, the current sideways movement of Bitcoin may be perplexing, but it presents an opportunity for investors who understand the historical context and market dynamics at play. Bitcoin's unique position as a digital asset, coupled with its history of price surges following periods of stagnation, suggests that a breakout could be on the horizon. Experts like PlanB, James Lavish, and Lawrence Lepard provide valuable insights into the factors influencing Bitcoin's price movements, including the effects of central bank policies, market sentiment, and macroeconomic conditions. As we move closer to the US elections, and as central banks potentially unleash more liquidity into the markets, the stage is set for Bitcoin to break free from its current range and reach new heights. We encourage you to stay informed and remain patient, as significant moves may be on the way. If you found this analysis helpful, please give us a thumbs up. Leave your thoughts in the comments below, and don't forget to subscribe for more in-depth market insights. Thanks for watching, and we'll see you in the next video.